Yeah, we're currently about 50% in high-quality defensive names, such as our consumer staples and healthcare holdings, and the other half is in our quality growth or cyclical names. And we think having that balance in the portfolio is important through this year, where there's still a lot of uncertainties, but potential upside as well.
Hello from Mannheim at the Fund Congress 2024. I'm here with Matthew Page from Guinness. Hello, how are you doing?
Hello, I'm well. How are you?
Great, thank you very much. We had a tough environment last year, but in the end it was pretty positive on the equity side. What do you expect for this year, 2024?
Well, I think economic growth is looking currently like it's going to slow this year relative to 2023. 2023 was a bit of a surprise in terms of the economic growth. So I think we have to be prepared for still positive economic growth, but not as fast as maybe we saw by the end of last year. I think that sets it up as quite a good position still for global equities. I think valuations are not excessive, and earnings revisions and dividend growth looks pretty positive.
Everyone is expecting rate cuts pretty soon this year. Is it your expectation too?
I think rate cuts will come through this year. I think we're probably more likely to see more cuts in the second half of the year than at the beginning of the year. Currently, the market is expecting 6 rate cuts in the US by the end of the year. I think that's probably a little optimistic, but we will certainly see rates being cut.
So everyone is being optimistic, rates going down, inflation going down. Could there be a negative comeback from inflation?
There's always a risk, and certainly with conflict currently in the Middle East, we've seen shipping costs double in the last few months. And so that's an example of that kind of risk that could feed through into inflation. But I don't think we're going back to the levels we saw post-pandemic.
And you're managing an income fund. How are you positioned through this environment? Is it more defensive at the moment, or how is your portfolio positioned?
Yeah, we're currently about 50% in high-quality defensive names, such as our consumer staples and healthcare holdings, and the other half is in our quality growth or cyclical names. And we think having that balance in the portfolio is important through this year, where there's still a lot of uncertainties, but potential upside as well.
So a defensive, balanced portfolio in an environment with rates going down, maybe not as quickly as everyone thinks. There's Matthew Page from Guinness. Thank you very much.
Thank you.